Alright, so gang, it's your boy Nature, aka Nature. Alright, so gang, you already know what time it is. Time to get y'all right, you know what I'm saying? Another video, dual candlestick patterns. Like I said, in the other video, we just went over dual candlestick patterns. So this is like part 2 of that. Like I said, we had to do the other part. It's like one more dual stick pattern that you're going to see, which is the bullish engulfing and the bearish engulfing. So we already ran over that. So make sure you check that out in like another live. So the other like two stick candle pattern that we're going to look at is the tweezer top. So that's what we're going to look at right now. Tweezer top. So this is a tweezer top and a tweezer bottom. So you can see it's reversal for a downtrend. So alright, so let's just read a little bit about it. So a tweezer bottom and a tweezer top. A tweezer pattern are two candlestick reversal patterns. So remember, like, reversal patterns are signals that signify that a move may be coming. So these type of candlestick patterns is usually spotted after extended uptrends or downtrends, indicating that a reversal will soon occur. There are two types of tweezer patterns: the tweezer bottom and the tweezer top. Notice how the candlestick. So I'm going to see that example again. So these, it looks like tweezers. So when you see these like two-stick candlestick patterns, reversals, like bearish engulfing patterns, bullish engulfing patterns, tweezer bottoms and tweezer tops, these are signals that a strong move may be coming, or a reversal pattern. It's a strong reversal pattern signal. This is the other strong reversal one y'all to know. It's tweezer bottom and tweezer top. The most effective tweezer. So the same as the overall trend. If price is moving up, then the first candle should be bullish. So the second candlestick is the opposite. The overall trend, if price is moving up, then the second candlestick will be bearish. So it's just like bullish and bearish engulfing. It's just a tweezer bottom and a tweezer top. So you see this, when you see this in the market, it's a reversal coming. So just read a little bit more of it, dive in a little bit more about it. So the first candlestick is the same as the overall trend, but the first candle should be bullish, and the second candlestick is the opposite of the overall trend. If price is moving up, then the second candle should be bearish. So if it's moving, so if this trend is moving up, it should be bullish. If the trend if it's the opposite of the overall trend and price is moving up, and the second stick should be bearish. The shadow of the candlestick should be the equal of the length. Tweezer top should be the same high, while tweezer bottom should have the same low. So these are like the two like candlestick patterns that you want to see really. And you're gonna go over like triple candlestick patterns too, but also have to still want to go over a few single candlestick patterns that I'm gonna give y'all more other videos. So tweezer top and tweezer bottom. Pattern. Okay, so this is a tweezer top pattern. Notice it's overall like let's see the example as they have as a tweezer top and tweezer. Read the example. It looks like topping pattern occurs while the high of the two candlestick occurs at almost exactly the same level following in advance. A tweezer bottom occurs when two candles back to back occur with very similar lows. Like many other candlestick patterns, tweezers occur quite frequently. So show y'all some images of the tweezer top and tweezer bottom. Alright, so as you can see, the Tweezer right here. So you're gonna see this pattern a lot in the market. Let's reading more about it. Let's read. The Japanese has been using candlestick charts to trade economy for 17 centuries. Like, tweezers can take on various appearances, but all have a couple of traits in common. Sometimes they appear at market turning points. They may simply indicate that the possible of reversal. They can be used with a boarding content, a market analyst to provide a trade signal for trend traders. So really, we don't, it's a reversal pattern, but we just don't get in a trade right away. We have to look to see what the candlesticks proceeding after that. Pay attention to the following candlesticks that proceed after you identify the two or dual candlestick pattern, to the formations that that consists after that. So the candle body is created by a difference between open and close, while the thin shadows on either end of the candle marks a high and a low over the period. A dark or red candle means that the close was below the open, while a white or green candle shows that the price closed higher than the open. So key takeaways is a tweezer top pattern occurs when a high of a two candlestick occurs at almost exactly the same level following an advance. The tweezer bottom occurs when two candle back to back occurs very similar lows. Like many other candlestick patterns, tweezers are quite frequently. So tweezers are more meaningfully part of other trends, especially pullbacks. So on pullbacks, we're gonna explain pullbacks again. I said we're gonna explain pullbacks again. Pullbacks is important. Indication of a shift in trends and direction. Tweezers are bottoms at toppings and bottoms patterns that indicate a trend direction. However, a broad content is usually needed to confirm the signal, since tweezers can occur frequently. A topping pattern occurs when a high of two candlesticks occurs at almost exactly the same level following an advance. A bottom pattern occurs when the lows of two candlesticks occurs at almost exactly the same level following a decline. So there are additional criteria. The first candle should have a large real body. The difference between an open and close. However, the second candlestick can for two candles may look quite different. Examples. For example, a tweezer top, the first candle may be a strong up candle closing near the high. On the other hand, the second candlestick may be a doji, a cross shape, a neutral candlestick pattern that doesn't high but still has a similar high to the first candle. So this is for so the second candlestick is going to be like, a doji or a cross shape or a neutral candlestick pattern. So, make sure you look out, because tweezer tops do occur. For the premise behind this being a topping or a bottom pattern is that the first candle shows a strong move and occurring direction. In contrast, the second candle pause previous day price action. A short-term shift in momentum has occurred, and traders should be aware of it. So, these candlesticks, if you see, they actually, like, when you see like a large candlestick, these are actually, like, I have to pay attention to. These candlesticks are actually for the day, for like a tweezer top pattern, and the overall trend might have been going up. Buyers might have been, or it might have been a green candlestick going all the way up, and then you see a doji, and it says it's like, it could be like a reversal pattern. So because it's not a lot of momentum's going on. If it's a doji, it's not. So you have to pay attention to that. If it's not a lot of momentum going on, then traders should be aware of it. Following below shows two circles drawn on the chart one blue and one green. The larger green circle marks a classic tweezer bottom. There was a move lower, a strong down candle, and almost exactly the same low. The small second body indicates less selling interest than the previous candle. It is a tweezer topping pattern. However, ideally the first upward candle should be slightly larger to show a shift in momentum from the first candle to the second. So, however, ideally the first upward candle right here, as you see in the picture, should be slightly larger to show a true shift in momentum from the first candle to the second candle shift. So this is a picture of a tweezer bottom, and it's it's a reversal pattern. So the tweezer bottom and the tweezer top. So we already went over bearish and bullish engulfing patterns. If you see a tweezer bottom or you see a tweezer top, the tweezer bottom is engulfing, and that's a bearish engulfing pattern basically. But you will see it's opposite. Instead of the second candlestick pattern being as you see in the bullish and bearish engulfing patterns, as the second it will be as the bullish engulfing pattern. In the bullish engulfing pattern, the bearish engulfing pattern, the second candlestick is engulfing the first candlestick, signifying that reversal is coming. Bullish meaning it's going up, and bearish means it's going down. However, in this example, for tweezer topping patterns and tweezer bottom patterns, as you see the slightly larger than the first candlestick pattern. So it's a reversal as far as like the order. That's how I look at it, So that's how you should look at it too. I don't know what happened. Okay. Sorry about that, gang. For example, I can show you the bullish and bearish engulfing pattern. Let's show you that real fast again. So just slightly go over there again. But you can see as the bullish and bearish engulfing pattern, it will be different. It's opposite in the tweezer top and tweezer bottom patterns. It's just opposites. So the first candlestick will be larger, and the second candlestick will be smaller. But in bullish and bearish engulfing patterns, you have to pay attention to the patterns. We still have to go over a couple first single stick patterns that we haven't went over yet, and that I'm about to give y'all. We still gotta do triple stick patterns. So these are the two stick patterns, like two candlestick pattern reversal patterns that y'all gonna see. Which will be the bullish and bearish engulfing patterns, and the tweezer top and tweezer bottom patterns, as far as dual candlestick patterns. So gang, I was going to show y'all bearish and bullish engulfing patterns again, to show y'all the difference and how that looks. I actually could bring up an example in Google of the bearish. Even though it's right here, let me see, I might just be able to, sorry about this game, so we're going to show y'all bearish, Right. So as you can see, of a bullish and bearish engulfing pattern. Like again, I told you I was gonna help y'all. So this is how I can help y'all. You can do it. You can once you understand these patterns, like make money for yourself, and do whatever you can. Invest in businesses. Invest in real estate. You'll be able to do that once you understand how to do this. So this is what I wanted to do. To help my peoples as much as I can. So this is how I'm gonna help y'all. So it's gonna be continuous of videos. So don't even worry. But this is an example of bullish engulfing and bearish engulfing. So as an example, the tweezer tops and the tweezer larger, and the second candlestick would be slightly smaller. But as this example, you probably see more of bullish engulfing and bearish engulfing. Um, the second candle is going to be slightly larger than the first. That's how you know it's a bullish and a bearish. So bullish means green if the green candlestick is larger than the second candlestick pattern. And make sure you look out for these patterns. These are signals that signify that. So if the green is slightly bigger than the red, and you see it's a larger slightly than the red, pay attention to the preceding following moves after that. It's probably a reversal pattern. Same thing with the bearish. If you see a red, larger candlestick, bigger than the first candlestick that's green, then opposite is a reversal pattern or a downtrend is about to come, a major downtrend. So, gang, so like I said, I'm gonna do everything I can to help y'all. I'm gonna have more videos, be more and more consistent. Soon, I got y'all. So, alright, it's your boy Nature, aka Nature, gang. Stay tuned for the next video, and a few things gotta talk about. I think we're gonna do single candlestick patterns, and next, and then triple stick candlestick patterns. But we're gonna get it done. So